Thank you, Alina. Thank you, Red Cloud, for hosting and executing an excellent conference. I am Eric Zaunscherb. I'm the chair of the board of Critical Elements Lithium. I used to be a mining analyst, and at the end of my 34 years, retired as the head of Canaccord Genuity's global mining research team. Critical Elements is the first board that I joined. It is a project and a management group that I highly respect. So let's get into it. Usual tests. In terms of our vision, we talk about being a company that wants to be a large, responsible supplier of lithium to the EV and energy storage system industries. Of course, that's a bit of a motherhood statement. Where does that come from, being a large, responsible supplier? Well, we back that up by the fact that we have over 1,000 square kilometers of excellent, highly prospective property in northern Quebec. The Rose project is only the first within that large package. The Rose project features extremely high purity, which is, again, something I will get into, but we also have 3 other discoveries on the property that we want to advance with further drilling. In terms of the relationship with the Cree, it is excellent. We signed our IBA, the Picatao Agreement, in 2019, and in terms of the other milestones, we have federal approval, we have provincial approval, we have the mining lease, we have approval for the reclamation and restoration. Basically, there are a handful of small minor permits that remain, but by this summer we will be fully shovel ready. So that makes the Rose project, the most advanced in North America amongst hard rock development projects. In terms of the stock price, you can see exactly what's going on with that, and you know that that's consistent with a lot of lithium stories these days, coming down from just over $3 a year ago, bouncing back right now in around the 70-cent area, 74 cents, and that's reflective of the sentiment change in lithium, but it's also reflective of disappointment that we haven't delivered yet on the deal. That deal fatigue, getting that project financing in place so that we can move forward. From our perspective, we are doing the right thing internally. We are very confident in where we're going with that, and we'll talk further about that package. You can see we have decent coverage, 8 firms on the street, including this one. We're very pleased with that coverage, and we'll see about growing that further as well. I mentioned high purity. That is an extremely important component of this story. Again, I'll expand on that. First Nation support's important. Another differentiator here is the management team. Our CEO is Jean-Sébastien Lavallee. Our president is the former CEO of Rockwood Lithium, Stefan Haber, and his VP Finance CFO, Marcus Brune, were on the team at Rockwood Lithium that built Rockwood Lithium and then sold it for $6.2 billion US to create Albemarle's lithium division. They know what they're doing in this industry, and having a downturn like this, it's invaluable having them there to help us pivot. In terms of strategic partners, like the previous company, we have not allocated any of our offtake. We have gone on the view that a lot of these offtake agreements, the memorandum of understanding, letters of intent aren't worth the paper they're written on. We're seeing that in action today as we've seen the downturn in lithium pricing, as offtakers as well as banks have backed off on their previous support. And what we're interested in is seeing off-takers that align with shareholders. In other words, if you want our lithium, then you're going to invest in our project, either in the company or in the project. So that's an extremely important differentiator. And then finally, in terms of re-rating, the stock currently is trading at around 0.15 times NAV. And that's an extraordinary entry opportunity for shareholders, investors at this point in time. Milestones. One thing about this company is management has delivered on absolutely everything that they've promised. What they've not been good at is on timeline or management of expectations on timing. But that is something that you work towards. You deliver things like the feasibility study, the permitting, as we've discussed, and at the end of the day, they deliver, and they have delivered on everything that they've promised. experienced leadership team. I did mention Stefan and Marcus on the lithium side. It's been extremely important to have that experience. Jean-Sébastien Lavallee and his father were the original discoverers in 2008, 2009, and they have been present there as the project has been advanced. Another key component here is the hiring of Yves Perron. Yves is our VP Engineering. He is the mine builder, the experienced team leader who has built mines in Quebec, built mines in Cree country, has that experience. And let's face it, if you're not a Francophone driving a Francophone team in Quebec, then it's going to be particularly challenging going forward. So we're extremely pleased to have Yves and his team on board. In terms of land package, I mentioned over 1,000 square kilometers. We do have over 1,000 square kilometers in the area. Jean-Sébastien and his father were early movers in the area, so they picked ground on geological prospectivity, but also access to infrastructure. And if you look at that photo on the bottom right, you can see the power line. The Rose deposit literally sits under the power line, and we have the permits in place to move that power line a few kilometers over. But you can see how excellent the infrastructure is as a result. Now, in terms of exploration potential, we have the Rose deposit sitting there. You can see the pink star in the upper left, but we also have 3 other locations of identified lithium mineralization at surface. So at Lamar, at Duval, and at Rose West, we're going to continue exploration to expand on the resource life, which is currently 17 years. And frankly, that's been one of the knocks against the project. But the reality is drilling stopped in 2016 to allow the company to focus on the feasibility study at that time. Now we're going to resume exploration. It's not like the deposit is finished in terms of expansion potential, but now's the time to expand on the resource life, and we're very confident that we can add to the Rose life. We can also identify further mineralization at Lamar and Duval and potentially create another mining center within the large property package. I can't emphasize enough how important the relationship is with First Nations. In this area, you've got Cree. We have our Picatao Agreement, as I mentioned, that was formed in 2019, formalized. And frankly, it's very heartening when there's a CBC interview that's trying to be a hit piece on lithium in Quebec, and the chief of East Main says, well, we are very proud of our high school graduates in East Main. Oh, and why is that? That's the highest graduation rate in Cree country. Oh, and why is that? Well, it's because the young people in high school graduating see real jobs, metallurgists, geologists, engineers, in their backyard. And that is what's driving that high graduation level. That's fantastic. Now, we're looking at producing over 200,000 tons per annum of spodumene concentrate. It's extremely high purity, and that means that 1/4 of our production will go to technical grade spodumene, which will go to the glass and ceramics industry. So you need low mica, you need low iron for that. And the beauty of that is that you then get approximately a 100% premium on technical grade spodumene concentrate. 75% will go for chemical grade. That will be going for conversion for the EV and ESS industries. We also have in our back pocket plans to build a conversion plant, most likely on the hydroxide side, depending on who our eventual strategic partners will be. And we'll work closely with those partners given the complexity involved in conversion plants. I mentioned the high purity. Well, you can see at the top left, at 0.8%, that's a very low iron oxide content. Mica content amongst the lowest in the industry at 2.7%. But what's particularly important here is the 87% recovery to lithium, to spodumene concentrate. And that's a function not just of the impurities or the lack thereof or the minimal impurities there, but also the grain size. When you talk to your lithium companies in your portfolio, they'll be very proud of how large their grain size is. And that's very true if you're processing using dense media separation. In our case, we have small crystals, and those small crystals are perfectly suited to using flotation. And so based on 50 tons of bulk sampling and working very closely with some of the industry leaders in metallurgy, we're very confident that we can deliver 87% recovery, which isn't just great from an economic perspective. It's also important from an ESG perspective. You're only putting 13% of waste into the ground instead of 40%, 50%. So that's an extremely important point. And again, with a very low iron oxide content in your concentrate, that is what attracts the glass and ceramics industry for that important premium. These are the figures from the feasibility study. You can see that 66% after-tax internal rate of return. That's obviously very, very robust. 17-year life, which we feel that we can expand upon. CapEx of $471 million US. These are prices based on August of last year. We're doing some detailed engineering now, and we continue to be confident in that sort of a CapEx figure. We redid the feasibility study last year to capture some of the pricing at that time, but also a change in scope. In the original feasibility studies, we'd been looking at a camp that sits not too far from the project that was being run by Hydro-Quebec. And we saw the potential for a joint venture with the Cree, and we didn't find that was moving fast enough for our timeline. We wanted to protect our timeline, and so we moved the camp into our own scope, and that's what boosted CapEx at the time a little bit. This is the price deck that we were using in that feasibility study. It was conservative at the time. Certainly isn't conservative if you're looking at spot pricing today, but none of the strategic partners that we're talking to are looking at today's spot price as indicative of long-term pricing. So even if you took this price deck generated a $2.2 billion US NPV at 8%. If you back that off by 40%, you're still getting a $1.2 billion US NPV in a company that has a market cap of 150 million Canadian. So that's the re-rating opportunity that I was talking about. Again, the split, you can see 46,000 tons of material going to the glass and ceramics industry, 158,000 tons going to the chemical conversion. And as I mentioned, that was based on a 50-ton pilot program, which confirmed the recovery rates that you can see there. CapEx, you can see how that breaks down. Conscious of time, I'll move on. On the right side, you can see the US dollars per ton for lithium concentrate. You're looking at sub 700 US for all-in costs, sub 600 if you include the tantalite credit. That tantalite is highly desirable for the electronics industry. As I mentioned, this management has delivered on everything that they've promised. Contrary to some of the entertaining rumors spread by some of the short sellers out there, everything has been delivered upon. The timeline is the question, and I would certainly sympathize to the shareholder, being one myself. What remains is getting the project financing together and then making the final investment decision. We target being able to construct by the time the snow flies in October. This is what the timeline looks like. It's a 20-month construction period. So once we get the ground prep going, we have a 20-month build, and that would have us with initial production by the end of 26 and ramping up to commercial levels in 2027. Now, how does this get funded? Obviously, the sentiment in the industry has changed. There was a question for my previous presentation concerning the interest level on the offtake. That is enormous. I mean, we had dozens of parties in our data room looking at this project. There's continued significant interest from end users in getting offtake. That's not the hard part. Debt is also something that one can achieve. The question becomes at what sort of a discount rate. The faster you push to get that debt in place, the higher your interest rate goes. So we're proceeding on that very cautiously. And then finally, it's the equity. The question for management is, do we sell interests in the company right now when it's trading at 0.15, or do we sell an interest in the project, which is trading at 0.5, 0.6 times NAV? The answer to that is quite clear, but that represents a pivot, and that also represents time. We would much rather take a couple of extra months to deliver a solution to put this into production that maximizes the return to the shareholder. That is our goal. There are three things that you can do to change that downslope in the price. One is not in your control, and that's a change in where lithium is going. We can't affect that market. Two is how soon we get this project into production. That's what we're working hard to do. Third is exploration. I mentioned we've got 17 years. We have enormous exploration potential on over 1,000 square kilometers. That's what we're working on delivering next. And you'll be seeing over the next few weeks exploration updates that will address that. I'll stop it there. If you have any questions, let me know.